Good morning, traders. It's Friday, April the 17th. Going to run through a lot of charts this morning and some seasonality charts, so kind of bear with me. I'm going to go through it fairly quickly to save everyone some time here. Now, looking at the SP 500, the daily chart, you can see futures here, the current bar here today, this red bar, this is down, and we're trading significantly down about 0.6%. The Russell 2000 is leading the way down over 1% at this point. Now, if we just quickly jump over to look at the US dollar, here is the US dollar. This is the 5-hour chart. And let me just highlight here. You can barely see it because this chart's squished down, but more or less it's a 5-hour chart. And what we're looking at is we got this falling kind of wedge here, this tightening formation where price is getting squeezed tighter and tighter into a falling wedge there, typically a bullish pattern. Overall, the trend is up in the dollar. We are settling down to some key support zones, some key pivot zones down here. It's just had a strong bounce just in the last 10 minutes or so. But overall, looks as though the US dollar is setting up to go higher. And of course, a higher commodity or higher dollar will put some pressure on commodities. But at this point, the US dollar is still down on the session, and it continues to be trending down on a very short-term basis here. And of course, that is putting upward bias on the commodities. So if we take a look at the commodities here, you can see most of the things that are green up here are commodities. And then, of course, we look down here and we see the major indices which are down the most: the NASDAQ, the SP 500, Russell 2000, the Nikkei. All these things, all the major indexes are down, and commodities are slightly higher. And of course, that has a little bit to do with the dollar. Now, let's jump over to a couple different charts here. Let's take a quick look. Let's just take a quick peek at the Russell 2000. I haven't looked at it yet this morning. Okay, well, this chart won't update for pre-market, but let's jump straight over to commodities really quick. Here's the gold chart. Gold continues to be struggling. Gold and silver, the big picture for gold and silver has not changed. Let me just zoom out. Long story short, it's in a downtrend, still making lower highs and lower lows, and it continues to struggle. And with the dollar rising, that's going to keep putting pressure on gold. And of course, I think we're going to see the dollar bottom today or this weekend, and we'll start to see it have a bounce. And of course, that's going to put some pressure on gold and silver and commodities in general. Now, looking at this chart on a very short-term basis, you can see we had a nice strong move to the upside, quick pullback. Very strong surge again to a new high, but then we've had a strong pullback, a little mini bear flag, another strong pullback, another bear flag. We're making short-term lower highs and lower lows here. We're stuck under the 100-day moving average, flirting at that 50-day moving average. And we could easily see this break this neckline right across here. If price starts to break down, and we could see it go all the way back down, test these lows, and possibly even go to new lows, especially if the US dollar explodes to the upside and has a parabolic spike higher, which is what I've been kind of leaning towards and thinking is going to happen going forward here. So we could see lower prices in precious metals across the board and miners in the short term. Looking at natural gas, here's the natural gas chart, the daily chart. It's been in the strong downtrend. It's been losing its downward momentum slowly moving into a sideways formation. We've had a nice rally here the last few sessions. Let's see what the volume is. We've got some half decent volume here. We are trading at resistance. We've got some pretty good volume going on today. And of course, if it can break above this previous high right over here, let me just zoom in a little bit more. If it can break above this previous high, that would be the first sign that we're potentially starting to trend higher, because we'll have broken one minor internal pivot high here. And that'll give us now a higher high. We still have a lower low, so it's still a 50-50 bet. But you can see the moving averages, the 50, the 20, and the 5-day. They're all sloping down more or less. The 5 days below the 20, so that's a bearish sign. But once we start to see this pop up, I think we're going to see a pretty strong rally in natural gas going forward. And of course, this chart is set up with a lot of key pivot zones that when these highs get broken, we're going to see short covering. We're going to see a surge in price higher. So we've got all these pivot highs here. As they get broken, it's going to trigger short covering. And of course, that's what fuels these sharp rallies, especially in precious metals in natural gas. We've got all these minor little pivot highs, and of course, all these levels. So as the price starts to break, it can explode and start running these stops and really unwind, and you get these great big spikes in natural gas price. Now, taking a quick look at the seasonality chart of natural gas, we're just going to look at this top chart right here. Of course, we are in April, and there's a natural tendency near the end of April going forward. We usually see the price of natural gas slowly creep its way higher and work itself up. So overall, the fact that we have been seeing natural gas flounder here for some time, and the fact that it typically starts to rise in March, and we're well underway halfway through that level, we might see it finally really get out of this downtrend, and we're going to see the momentum really shift to the upside and see it catch up with some of the lost gains that it typically has seasonality this time of year. So I think we're getting to a point where natural gas is going to start to have a strong rally here. Now let's take a look at utilities. Now as we go into May, there's that seasonality, or the saying, sell in May and go away. When people start to sell equities, they typically want to move to safe havens when you hear that coming. So you're going to move into utilities, high-paying dividend stocks, and utilities should act as a safe haven. So we've seen utilities more or less pull back. They're settling down into this previous consolidation zone. U.S. equities have been rising, yet utilities have been floundering. They're not really a speculative play. They're more of a safe haven. It's been forming this little bit of a basing pattern. So the question is, are we going to see this money start to flow in here as the safe haven as we start to near May? Because investors are going to expect people to start selling stocks, and of course you want to get into these safe haven plays, and we'll see utilities and bonds typically move in a similar formation when a little bit of fear starts to creep into the market. Now if we take a look at the seasonality chart of utility sector, you can see from March all the way up into May, even June is when it puts in a typical kind of spring high here. We've got a strong rally, and here we are. We've seen a consolidation in utilities for the first half of April. That's just right where we are, and of course it shows the second half of April having a very strong move up, and of course that's money moving into the safe haven sector, anticipating weakness in the overall stock market in May. So I think we're setting up here for a pop. If we start to see the utility sector break to the upside here, start to break this minor pivot high over here, let's just zoom in a little bit. If we start to see a break this previous high, this could be the first early sign that we're starting to see the momentum shift to the upside. And then of course we're going to have these other pivot highs which are going to help spur on some more buying, and it should start to work its way up, and we could start to see it become the stronger of the sectors. Taking a look at bonds real quick. Here is the TLT, the 20+ year bond. It's been consolidating, very similar to utilities. It's been flagging out here. Fairly bullish pattern. It had a three-wave consolidation that really flushed the market out. It's had a nice impulse move to the upside, a very strong move, breaking this previous pivot high. So it now has a higher high, and one of these may be the higher low. This is a nice tight bull flag. We could see this explode to the upside and test these highs if we start to see the equities market have a little bit of weakness, or even the equities could move higher, but we could see bonds move up in anticipation with equities as fear slowly creeps in and people rotate some of their money into bonds. So let's just take a quick look at the 30-year bonds. Typically from the end of April going through the summer, we see price rise in bonds, which is falling in line with the chart pattern that we see here. So the safe haven plays, I think, are going to be where money is going to start to flow here as we creep into May, with everybody expecting to sell in May and go away. Taking a quick look at crude oil. Crude oil, we had that breakout there, a big breakout to the upside. It's been consolidating in some tight patterns here. We haven't got involved in it because we do have a Russia play, which is moving very similar in how it continues to expand higher. It's almost like a crude oil play. Some of you, I'm sure, got long on the breakout and are still long. We could continue to see this rocket to the upside, but overall we're going to see if we get a pullback and a test, and what type of test do we get, what the volume's like, how big the move is back down, or if this is just a major short squeeze that the market's allowing to get the shorts out, and then we see it get slammed really hard with a big down bar and for it to break down and flush the market out. We kind of have the crude oil play in our RSX kind of trade there, which is again right here. So we continue to see that consolidate here. Yesterday RSX traded slightly lower, but overall it's consolidating above the 5-day, and I think we could continue to see this rip to the upside. Now looking at our other plays, here's the cow. Cow is up almost 0.7% yesterday. It's got this little bottoming formation. It looks as though it's setting up for a nice move to the upside. It just has yet to find the traction for it to really take off. Our other play is the EWJ, the Japan market. Continued to trade higher there yesterday. And again, if we just go to let's go to the weekly chart of this. It's a pretty big pattern that we have on this. We had a big run up, multi-month consolidation, pretty much almost a year consolidation. Started to break out of that. We had a pop and a pullback, and then it started to push to new highs. This has got potential to have a significant run all the way up to the 1430 something area up here. So we really could start to see it extend and continue to rip to the upside over the next month, and that's kind of what we're anticipating. Anyways, that's it for this morning. I'll talk to you in a little bit. Bye-bye.